When we think about the artificial intelligence revolution, the obvious names come to mind. Nvidia, AMD, maybe TSMC. But there's a company behind the scenes, less talked about, but absolutely critical. Without it, making advanced chips would be too expensive to be worth it. It's the production line police, the quality guardian that keeps Moore's Law going strong. I'm talking about KLA Corp, ticker KLAC. A company that not only rules its special area, but also has profit margins that would make software companies jealous, and a competitive edge that Morningstar calls wide and robust. In today's video, we're going to do a deep dive into KLA's investment idea. We'll find out why it's 4 times bigger than its closest competitor, how AI is boosting its profits, and what the real risks are with China. If you're looking for really high-quality companies for the long run, stick around until the end. We'll cover everything: business model, finances, risks, and how they use their money. The main focus is on how good the business is. What does KLA really do? Understanding process control. To understand KLA, we need to understand a very important idea in the semiconductor world: yield. Making a chip is like printing a newspaper on a tiny scale, layer by layer. A 12-inch chip can have trillions of tiny switches. If even a speck of dust or a tiny mistake in lining things up happens, the chip is ruined. This is where KLA comes in. They work in the part of the wafer fab equipment, WFE business that focuses on process control. Basically, KLA's machines check the wafers during manufacturing to find flaws and make sure measurements are super accurate. Why is this so valuable? Think about it. The more complex a chip is, like those for AI, the more steps it takes to make. More steps mean more chances for mistakes. If TSMC or Samsung only find a mistake at the very end of the line, they throw away a wafer that costs tens of thousands of dollars. KLA's machines help them find the mistake right away, fix the production line, and save the good chips. KLA essentially sells profitability insurance to the factories. And they're not just one player. They are the player. KLA has the biggest share of the market in this area. To give you an idea, KLA's sales in process control are more than 4 times bigger than their closest competitor, Applied Materials. This comes from putting a huge amount of money into research and development, R&D, over $1 billion every year. They've built a collection of products that covers everything, from the first chip idea to making lots of them. The economic moat. Now let's talk about how this business is protected. Why can't competitors just come in and take KLA down? KLA has a rating of wide competitive advantage. This is based on 2 main things: intangible assets and switching costs. The technical complexity, intangible assets. First, the technical barrier. KLA's machines inspect transistors that are 3 to 5 nanometers small. This is cutting-edge science. The know-how built up over decades of R&D creates a huge barrier for anyone new to enter. For a new competitor to get in here, they would need to spend billions, and it would take years just to get to where KLA was 5 years ago. The customer hug, switching costs. The second point is the most interesting for investors: integration. When KLA sells a machine, they don't just deliver the equipment. They send service engineers who act like an extension of the customer's team. They set up the machine perfectly for that specific production line. The chip maker builds their whole way of working around the data from KLA. Switching KLA for a competitor wouldn't just cost the price of the new machine, which is already high in the millions. It would cost stopping the factory, retraining engineers, redesigning workflows, losing years of accumulated defect data. This creates a forced loyalty. Once KLA is in, they stay, and their equipment lasts for decades, bringing in steady money from services and upgrades. It's a good cycle. The installed machines create data, which makes the system better, which keeps the customer loyal. The financial fortress, margins and cash. Let's look at the numbers, because this is where the idea really shines. In the world of hardware, high profit margins are rare, but KLA operates with gross margins in the 60% to 63% range. To put that in perspective, this is higher than many tech companies and way above the average for the hardware industry. This gives KLA unmatched pricing power. Their customers need the machines and pay extra for them. Besides the margins, we have cash conversion. The company makes, on average, $3 billion in free cash flow every year. The forecast is for this to go up to $5 billion in the next 5 years. They turn almost 100% of their net income into free cash. This means the profit you see on the income statement is real money coming into the bank, not just accounting adjustments. And the balance sheet? In June 2024, they had $4.5 billion in cash and liquid investments. Total debt is $5.9 billion, but the debt-to-EBITDA ratio is very low, 1.2 times EBITDA. Management says they need about $3 billion to run the business. The rest? They give it back to you, the shareholder. We'll talk about that in the capital allocation part. The investment thesis, AI and complexity. You might be thinking, okay, the company is strong, but does it grow? The answer lies in complexity. KLA's growth doesn't just depend on selling more chips in the world, but on selling chips that are harder to make. We have 3 good things helping us here. 1. Generative artificial intelligence. AI chips need new designs, advanced packaging, and HBM, high bandwidth memory. The more layers and tiny switches, the more inspection is needed. 2. Gate-all-around, GAA. Transistors. This is the new way to build transistors that replaces FinFET. It's super complicated and needs new measurement tools. That's a win for KLA. 3. Services. Remember the installed base? KLA's services part of the business grows steadily, which helps smooth out the ups and downs of selling new machines. The forecast is for a yearly average revenue growth of 9% until 2030. It might not sound as exciting as a startup, but with 60% margins, this means a very strong growth in earnings per share. The other side of the coin, risks and uncertainties. No investment idea is honest without looking at the risks. What do the bears, the pessimists, say about KLA? 1. Geopolitical, the China risk. This is the biggest risk. The United States has put strict limits on exporting advanced technology to China. KLA had a lot of business there. Even though most of this risk has already been dealt with and lessened by growth in other areas, an increase in tensions could cut even more revenue. 2. Cyclicality. Semiconductors go through cycles. There are periods of boom and bust. In 2024, we saw a downturn. KLA isn't immune to this. In downturns, revenues go down. Investors need to be ready for ups and downs. 3. Competition from giants. Even though KLA is a leader in its special area, Applied Materials and ASML are huge companies. If Applied Materials decides to put all its power, which is bigger in total, into KLA's area, it could take away market share over time. Conclusion and capital allocation. To wrap up, how does KLA handle its money? Their capital allocation rating is exemplary. They follow a clear rule: invest heavily in R&D to stay ahead in technology and give any extra money back to shareholders. The goal is to give back at least 85% of their free cash flow. And they often do even more than that through growing dividends and aggressively buying back their own stock. My opinion? KLA Corp is a bet on the complexity of technology. If you believe the future will have more advanced chips, more AI, and more automation, KLA is the toll gate that all manufacturers have to pay to get there. It combines the safety of being a leader in a special area with the profit margins of a software company. What about you? Do you think the geopolitical risk from China is too big, or does KLA's tech leadership make up for it? Leave your thoughts in the comments. If this deep dive helped you, subscribe to the channel for more global stock analysis. See you next time.